Hey everyone, it's your girl, hashtag JLoan. Guess what day it is? It's Tuesday, and you know what happens on Tuesday, right? Another Tuesday, another tip with it's your girl, hashtag JLoan. This week's topic was requested, and I love to do videos about this topic because it, to me, is the number one reason after credit that people, one, don't understand, and two, that disqualifies borrowers from qualifying for a home loan. And that topic today is student loans. And what a better time to do a video about student loans, because it's the most understood topic when it comes to home loans. Why are you including that in my debt to income? I don't even make payments right now. My loans are in forbearance. I'm still in school. I'm not scheduled to make payments till 2 years from today. Why are you including that? So I'm going to show you today the actual guidelines and matrices for all of the programs, from FHA to conventional, and broken down into Fannie and Freddie, VA and USDA, and showing you that these are guidelines. We must include a payment if the guideline states that we must do that. So I'm going to show that to you so that you understand that it's not a lender thing. It absolutely is a guideline thing. So I'm going to share my screen like I've been doing. I'm trying to help educate and help you through your home loan process. So let me share my screen here and show you the actual matrix. So here we go. So now I move to another side, but we're going to read the question and then we'll go through the answer together, okay? Can deferred student loan payments be omitted? Conventional Fannie Mae, conventional Freddie Mac, FHA, all say no. So even if they're deferred, you cannot not exclude the payment. You must still include a payment in that. VA says, yes, you can, but it must be deferred for 12 months from the actual note date. So if you have a payment coming due 4 months from your note date, then we're still going to include that in your debt to income. So it has to be 12 months. That's very important. USDA says, no, you can't have no payment. You can't have it omitted. You must use 0.5% if the payment is not reported on the credit report. So to make this easier for you, if you had a $10,000 student loan, 1% of that student loan is $100. So 0.5% would be $50. That's what we would include against your debt to income if we were doing a USDA loan. The next three questions says, if repayment is to begin, but payment is not available yet, what payment calculation can be used? And then it says, what payment do we use for graduated payment plan? And when the loan is in forbearance, what payment calculation should be used? So conventional Fannie Mae basically says, if there's no payment on the credit report, you're going to use 1% of the balance or the actual verified payment. It cannot be zero. So if the credit report shows zero, we can't use zero. So we're going to use 1% of the balance or the actual verified payment. So the problem with actual verified payment is if you're in forbearance or if you're in deferment, there is no actual verified payment. So we will most times use the 1%. Freddie Mac is kind of the same, but they give us a little bit of a break. They say if there's no payment on the credit report, use the higher of 0.5%. So I don't know why they didn't just say 0.5%, but it's 0.5% of the balance, or the actual verified payment cannot be zero. The big key here is the word higher. So if the actual verified payment is $75, but in my example of a $10,000 student loan, it's $100, we will change it from $75 to $100. Not saying you have to make a $100 payment, just for qualifying purposes. In our system, we will change it to $100 against your debt to income. FHA says, again, the greater of 1% of the balance shown on the credit report or the payment shown on the credit report. So again, if the payment shown on the credit report is lower than 1%, we're going to change that to 1% in our system. So again, it says, if using a lower payment than above, see the FHA note below, and we will get to that note here. VA is a little bit further. It says the greater of 5% of the balance shown on the credit report divided by 12 monthly payments or the actual verified payment. Again, it's the greater of. So if you have a $10,000 loan, you're going to multiply that times 5%, which gives us $500, and divide that by 12 months. That gives you $41.67. So if the actual verified payment on the credit report shows $75, we will still keep the actual payment because that's what it will be. So then it says, if used, refer to the VA note below. USDA says the greater of 5% of the balance or the verified monthly payment reflected on the credit report. So again, it is the greater of, and that's very key here. The next question is, what comes a lot? Well, I'm in an income-based repayment plan. What payment calculation are you using, or why are you using an actual payment? So conventional Fannie Mae says, hey, if there's no payment on the credit report, use 1% of the balance or the actual verified payment. But if the lender can provide documentation showing the IDR, which is income-driven repayment plan, is 0, then we can qualify you with 0 for the monthly qualifying payment. But this is the only program that will allow you to use an IDR, okay, or an income-based repayment plan. If you look at Freddie says, if no payment on the credit report, use the higher of 0.5% of the balance or the actual verified payment. It cannot be 0. So again, it cannot be 0. So even if you have a letter or you're in an income-based repayment plan, we cannot use that. FHA says the greater of 1% of the balance shown on the credit report or the payment shown on the credit report. So again, you must remember it's the greater of. So most times we are using 1% because that typically is greater. It says, if using a lower payment than above, see the FHA note below. And we will get to that note. VA basically says the greater of, the same thing as above, 5% of the balance shown on the credit report divided by 12 months or the actual verified payment. Again, it says refer to the VA note below. And USDA is also the same, the greater of 5% of the balance or verified monthly payment reflected on the credit report. The whole reason of telling you this is because you believe, or you may think, that just because you're in forbearance or you're deferred or you're in an income-based repayment plan, that we don't have to use it because you're not making a payment. But the reality is that is not the case. And based on what you qualify for or what your actual story is determines what you qualify for. As far as conventional FHA VA, then we will be able to determine which payment are we actually using, if any, and if we're using 0.5% or 1%, or the rules that we just discussed. So the note is for VA and USDA, if the payment reported on the credit report is less than the threshold payment of 5%, in order to count the lower payment, the loan file must contain a statement from the student loan servicer that reflects the actual loan terms and payment information for each student loan. The statement must be dated within 60 days of the loan closing and may be an electronic copy. It is up to the lender's discretion as to whether the credit report should be supplemented with this information. So that's just basically on our part stating if we want the credit report to reflect what the letter stated, we may need to take an extra step. If the FHA note says, if using a lower payment than indicated in the table above, UHM or Union Home Mortgage must obtain written documentation from the creditor stating the actual monthly payment, the payment status, the outstanding balance, and the terms of the debt to confirm the payment is fully amortizing. So in case you don't know what amortizing means, is if you go buy a car and it's a $600 payment for 72 months, it fully amortizes once you make that last payment in that 72nd month. Well, the same thing with the student loan. It's saying you have to get a letter that basically states whatever that payment is going to pay off in a certain amount of time. So if that payment's $100 over 10 years, then by that 10th year, that whole payment needs to be paid off. So the biggest thing here is that you have to remember that there are, you have payments that you must make, and they're never accepted to be really zero except for one program, and that's only if you're in an income-based repayment plan. So I'm going to leave this here for a second just so you can really see it, but you can always play the video back. I am going to stop sharing right now. So just really just have a conversation with you. I say this in every video. I never want you to be the one to determine whether you qualify and what you qualify for. That's what I'm here for. That's what mortgage professionals are here for. But of course, I want you to call me because I'm the best and I'm going to help you and I'm going to guide you. But yeah, if you call me and we take an application and we look at income and we look at your total story, I'm able to determine, well, maybe you shouldn't go FHA. Maybe you should go conventional. Can you even get your loans in an income-based repayment plan? I'm able to give you and guide you through a path that maybe it's a no now, but eventually it will help to guide your steps to home ownership. So if you have any questions, as always, you can always call me or you can inbox me. You can email me, and that is 817-601-5456. Or you can actually inbox me in my email, which is jholland, and that's HOLLAND @UHM.com. And since most of the time this is on social media as well, YouTube, Instagram, Facebook, just reach out to me there if you have a question that you want answered. But that's all I have for student loans. I hope that that's helpful. Again, this was recommended by a borrower who wanted me to do a video, and I'm always happy to take your requests to do videos on the things that you want to learn about that I maybe haven't done a video on. And guidelines change, so even if I have, I'll do another video. So I get these from you and also from the daily experiences that I may go through in the mortgage business on a daily basis. So it's your girl, #JLoan. I am signing off. I wish you the best rest of your week. Make it a great one. Be successful, be blessed, and stay safe. I'll talk with you soon. Bye.